Hi everyone, welcome to today's trade of the day, and for today's trade of the day we will be looking at the Kiwi dollar. Right, so what I have here is on the daily chart, and we actually see that the Kiwi made a low here and then push up to a high here before pulling back. Okay, however, a good point to note is that the Kiwi actually pulled back to a sort of a graphical overlap level. So let's use a retracement from the low to the high. We open off Fibonacci retracement level. We see that price is coming close to 38.2, and there is sort of a graphical overlap level here. Right over here where price is holding above, or we can actually back it up to this level as well. Right, so we can back it up to this level close to 38.2. So I'll just highlight the 38. So, and it's also in line with the moving average support. Okay, so remember it looks like there could be a possible short-term bounce on the daily. Alright, and let's quickly go down to the lower time frame on the 4 hours. So on the 4 hours, this is what we see. Alright, there's a very nice graphical overlap over here. Okay, nothing much to see. Moving average, of course, price is below, but that's because of the recent push down. Alright, so let's ignore moving average on the shorter term time frame. Okay, we see that price also started from this low and made a push up, so we can also use Fibonacci retracement from this low to this high and open off Fibonacci ratio, but I'm thinking we can open the 50%. Right, so the 50%, the 38, and this graphical overlap shows that there is quite strong support over here. Now it's a bit hard to see on the 4 hours, so we'll just quickly dive into the 1 hour. And let me just tidy this up as well. Okay, so on the 1 hour, we just want to focus on the more recent prices and show you guys something. Now, if we were to follow price action, right? If we were to follow price action, you see that price made a push down, reacted, and came lower. Okay, so we can actually use a zigzag Fibonacci extension, 0.1, 0.2, 0.3, and we see that the 161.8, alright, the 161.8% extension falls along this zone, right? So this is definitely a strong support zone. Okay, definitely a strong support zone. Now, furthermore, okay, if we take from this high and we draw a trend line down, alright, be careful not to cut the candle bodies, okay? It's okay if you want to cut the wick, but not the candle body. Now, we see that price was actually in a downtrend, and then it broke out of the trend line, the descending trend line resistance. Now it became a support, and there is a strong reaction. So we can actually use a retracement from this high to this low. We open all Fibonacci ratios, and we see that the 61.8 is actually in line with this graphical overlap. So let's highlight this 61.8. Alright, and I'm just going to put the levels in there. Okay, so very quickly, we already find all our key levels. This can be our take profit, right? This area can be our buy entry, and of course our stop loss can be just somewhere beyond this level here. Alright, so this is a very straightforward analysis. Right, we can the buy can be anywhere in this zone. Alright, price is moving up quite strongly now. Okay, and is in line with our daily bias as well, and also the daily indicator shows that we still have some room for bullish movement. So thanks everyone for tuning in to today's trade of the day. I hope this has been a good week for you guys. Hope to catch you guys next week. Take care and goodbye.